Hey, Megtoes. Just farting around in the backyard before work. Kind of cold, nasty out here. Can't really do much. Just taking a look at the place. I'm in the process of cutting all the tree trimmings into piles which can easily go through the shredder, and piles that can be cut and stacked for firewood. Some of that stuff's a little thin, but it'll make good kindling. Pretty crazy things we've had going on in the MGTOW sphere lately. All of these crazy doxing incidents. It's a nasty business, really. I mean, I know I show my face and my house and all that, but I'd like to keep my actual government name, as the straight shooter puts it. I'd like to keep that secret if I could, because I might come home one day to find 3 or 4 guys in my master bedroom trying to pry my gun safe off the wall. And then that could be a danger to my personal safety. I could have people dropping by with their families to stay with it for a few days. Stuff like that. So, I think some degree of anonymity is pretty important for everybody. Now, my job's pretty secure. They already know how I feel about this whole marriage thing, and most of my fellow mechanics and my foreman, pretty much everybody agrees with me. We're all starting to get old enough to know that that the whole marriage thing is, it can be damn dangerous. But I don't have to tell you guys that. But anyway, the main reason for this video is to discuss the difference between investing assets as far as like silver or bitcoins are concerned. Now there's a investigation, some government investigation, which is going to go exactly nowhere, and it involves all these big banks like HSBC, JP Morgan, and Bank of America, I think. Just tons of these banks, and they're all involved in doing what they call the silver price suppression or price manipulation. Basically, it's an attempt to make alternatives to the dollar or conventional investments. It's trying to make them less attractive, and so what they do is they're well known. I mean, everybody who's into silver pretty much knows that these big banks, they create paper contracts to deliver silver at a certain price or at a certain time, and they take those and they sell them on the open market, and that drops the price down, right? Because it just drives it down. And for some reason, man, I don't know why, but for some reason, all of the silver bullion businesses and the coin shops and all of these businesses that actually buy and sell real silver, they allow the electronic price, the spot price, to set the price which they buy and sell their silver for. Now, if I go down to my local coin shop, it'll be the spot price plus like $1 or $1.50 or something like that, because they got to keep their lights on, and then they'll buy for like the spot price minus $1 or $1.50 or something, and then that's their profit margin, right? But the way all of these, the way the actual price works, I mean, the silver market is like 90-something% paper silver, promises to deliver silver, or the dollar equivalent of silver, and then they just sell those. And it's just crazy that the silver these silver bullion businesses allow this fake electronic market to determine the actual price which they sell their physical silver for, which is, man, it's just nuts. And anyway, there's another government investigation going on and they're going to, and of course all of the regulators and everything are all purchased and bought and paid for by all of the big banks, Same with all the politicians. A representative democracy, I mean, it's got some flaws, and this is one of them. Those with the money end up purchasing the government, right? And they write the laws and all that nastiness. But basically, so with silver, that's a problem. And the banks basically control the price, except in certain times when actual physical silver is in like huge demand, like back in 2008, 2009, 2010. The silver price just went crazy, and people were having difficulty finding or getting real silver because the spot price did not reflect the real price or the real value. So the price actually did creep up to like $44 an ounce. But that is a problem with the silver market, right? But the difference between that and bitcoins, sorry if I'm continuously harping on bitcoins, but the difference between bitcoins and silver is that there is no electronic price that is like outside of the Bitcoin market, right? If the Bitcoin market is set by the exchanges themselves, and the only way to buy and sell Bitcoins is to use these exchanges, and the exchanges have to use actual, I guess you could call almost physical Bitcoins. They have to have the actual private keys of these Bitcoins in order to trade them, right? Now, in order to do that, if it were the same with silver, actual physical silver, that would mandate that people only trade physical silver, and there would be no electronic price. But with Bitcoins, in order to buy or sell Bitcoins, you actually have to have the real Bitcoins. There is no weird extra market for Bitcoins or promises to deliver Bitcoins, which can actually affect the price of real Bitcoins. In order to make a trade in Bitcoins, you need the real Bitcoins. And even though the bankers, right, have just insane amounts of money, they can't just print or create promises to deliver Bitcoins like they can with promises to deliver silver and then sell it into the market. So in order for the bankers to... now the bankers, let's get back to basics here. The bankers do not like competition. They do not want anyone to really have a system for storing wealth which is outside of the actual economy. They hate gold and silver unless it's in their pockets or in their vaults. But they don't want people to have the ability to protect their assets, protect their net worth, their wealth, because they want people to be dependent on the dollar, and they want to be able to inflate that dollar and profit from the inflation. Now, when I say the big banks, they are also the government, basically. They're one and the same, pretty much. And big bank executives go in and out of government offices. They are pretty much the same people. So basically, if in order to the beauty of Bitcoins is that it's outside of the current system. You cannot just run off $1 billion worth of silver promises or Bitcoin certificates, and then sell them into the Bitcoin market, because it just doesn't work that way. You need to have actual Bitcoins in order to sell them into the market and drive the price down. Now that's a problem for the big bankers, because they want to push those prices down. They want to push them down bad and make people lose all interest in Bitcoins. They've been doing a pretty good job throughout 2014. What they do is there's a whole secondary market of like mediators, of people who know people who have large sums of Bitcoins from like back when they were 2 cents each or less. And those people, when they want to liquidate a lot of Bitcoins, they can't really dump it onto the exchanges, because the exchanges they're like a smaller conduit for buying and selling. And if they dump a big amount of Bitcoin on the market, it will cause the price to react and drop rather dramatically. And then it's like they would like to sell their Bitcoins at a certain price, but they can't, because the moment they start dumping their Bitcoins onto the market, the price reacts and starts dropping. So then they end up not being able to do it. The price changes. It's like almost bait and switch in a way. They want to sell at a certain price, but then when they try to sell at that certain price in meaningful amounts for them, the price drops. So in order to really sell their silver, or their Bitcoins at a price that they want, they have to go through these mediators and do an off exchange. They say, okay, I want to sell 1,000 Bitcoins for $250 each, and then some other entity will say, okay, I'd like to buy them. And then they make the exchange off the market, and then the person sends the Bitcoins to their Bitcoin wallet. And what's happening, I believe, it's hard to really pin it down, because I don't have proof. But the bankers, their obsession with pushing all the competition out, which includes Bitcoin, and pushing silver down and everything, they have to be trying to push Bitcoins down as well. So basically, it's wise to sort of plan on it, but they really can't get a full, like, two-handed stranglehold on Bitcoins the way they can, or the way they have with silver, because in order to sell Bitcoins and drive the price down, they actually need real Bitcoins. They can't just create these promises out of nothing and then dump that on the market to affect the market. They can't do it. So they need to purchase Bitcoins off the market, and then, or borrow them or something like that, and then they can push the market down. They can't do that forever, though, because eventually they're going to run out of people who are willing to put their money into these deals, or sell big bunches of money, and eventually they're going to run out of early adopters who have a lot of Bitcoins to sell. So this low point that we have in the price right now, man, it cannot last. The market is growing. Big money people are putting a lot of, like, millions and millions into these venture capital things for the Bitcoin ecosystem. Like, I think one of the ex-CEOs of Bank of America, plus a bunch of biggies in one of these stock exchanges, they basically put like $75 million into Coinbase, which is another Bitcoin company. But there are many other situations like this, and those people don't do stuff like that without knowing darn well that there's an almost certain profit to be had. So, man, if you guys are not into Bitcoins, I gotta say, you should really consider putting a little in there. Now, silver, things like that, it's almost impossible to go wrong with silver. I mean, the moment we have a significant drop, or when we ease or drop into the next recession, which I thought was 2016, but man, it could be late this year. But I mean, like August, September, October, it could be around there. But my timetable says 2016, but man, there's some indications that it could be happening late this year. But when that occurs, people will react, and they'll lose faith in the banks, which are going out of business, and all kinds of, like other companies going out of business, and the stock market will start going down, even with printed money. And then in times like that, man, silver is just the way to go. People will panic and bid the price up through the roof. The big bankers won't be able to keep the price down, just like they failed in 2010-ish. And that is just going to go crazy. And you're probably going to get a 300% raise in over about 2 years or so in the price of silver. So maybe 2 years into it, we could probably see, I think we'll see about $60 an ounce. Although it only, in the most recent recession, we only saw like $44 an ounce. But I think this one will be worse. But considering that they can't really get their fist around silver, Bitcoins, the way they can with silver, it almost has to have a higher chance of going up. So, and plus I've already harped on the value of the network and how how transactions are so easily made, like to anybody in the world, and how they're almost impossible to be seized by governments. And we might see some of that Cyprus-style bail-in bullshit that they did in Cyprus a few years ago, where the government says, okay, we want money, so therefore we're going to seize about 10% of everybody's savings and their retirement accounts and all that stuff. So, it's wise to have something that they can't seize as easily. And with Bitcoins, man, it's hard for them to steal that shit. So basically, my overall thought of this video was that it's much harder for the bankers to manipulate the price of Bitcoins, because they actually need the real, genuine Bitcoins to dump into the exchanges and push the price down. And also, of course, silver is going to be doing very well this next recession. And then, of course, I mentioned the doxing incidents. It's a nasty business. Well, I guess that about covers it for this video. I hope you guys have a good day. Later.